All right, for more, Hari Krishnan is back with us, Group CEO and also Managing Director of PropertyGuru Group. He joins us from elsewhere in Singapore. Hari, great to see you. Welcome back and hope you're keeping safe. Are you happy with the numbers?
Morning, Martin. No, absolutely. Listen, we're very pleased. It's our first quarter as a publicly listed business after existing for 15 years. So delivering good, strong revenue growth and increasing profitability. It's a good first quarter to have under our belt.
So here's the thing, the environment that we're in, because of China COVID lockdowns, because of the war in Ukraine, because of incredibly easy monetary policy in the run-up, right? We're talking about the risk of recession or stagflation every day. We're talking about high inflation every day. Part of that is the way that property prices, including in Singapore, just continue to grind higher. I mean, obviously, this must be a good headwind or a good tailwind for your platform. But, you've been through business cycles before. Does this smell like a top to you? I have to ask.
So I think what's unique with this instance, Martin, is it's supply driven. So as with many other things that's happening in the world, when it comes to property pricing and rental pricing more recently here in Singapore, it's driven by a supply constraint. We've not had, the construction sector has largely been shut for 2 years. It started coming back online last year, but as you know, labor force in the construction space was down. Materials due to supply chain breakages are down. And as a result, construction is way off. And as a result, supply has been constrained. And so if you look at our property market reports, you can see a massive gap opening up between demand and supply. So demand has been on a tear and supply has been constrained. So that's what's driving some of this pricing. What is encouraging was earlier this week, already the Singapore government talking about another 4,500 build-to-order units coming up in the public housing space with the HDB. That's good early signs to see that supply correcting. I think we need to see more of that in the next 12 to 18 months for some of that price to moderate.
Hari, when I take a look at the distribution of your business geographically here, obviously started and sort of based in Singapore, you're about 4 times, you get 4 times more engagement than your closest peer. That sounds pretty good. When I take a look at the similar numbers for Malaysia, 25 times more user engagement than your closest peer in that market. Why? I mean, explain what gives you such a huge advantage there.
So I think in Malaysia, it's more the result of, last year we did a pretty large acquisition. We did a roll-up play with our leading competitor in that market, iProperty. So we run 2 brands with 1 team in Malaysia. So we've got PropertyGuru Malaysia and iProperty Malaysia and a single team that services both customer bases. There are slight differences in the user base, slight differences in the psychographics, so the kinds of users who use iProperty Malaysia versus PropertyGuru Malaysia. But obviously the benefit for us is that independent of what your needs are or how you think about buying property or selling property for that matter, we have a solution for you. So in that market, we got 2 brands, and that's the reason we have that kind of market share.
Gotcha. Is that acquisition understood? So talk to us about some key metrics that you use daily, even hourly in your business. One is quarterly average revenue per agent. In a market like this, how's it looking?
No, it's looking healthy. See, I think for us, average revenue per agent is the total spend that an agent spends on the platform. So in most markets other than Vietnam, we sell annual subscriptions to our agents. So they pay upfront for the next 12 months to participate in the marketplace. In addition, they might buy other products to showcase their properties or showcase themselves, to do some self-branding, etc. And we charge extra for that, of course. And so if you take their total spend and average it out over the agent base, that gives you a sense of how much our agents spending on average on us. So that continues to trend very well in our markets. And I think that's a reflection of the fact that markets are beginning to rebound out of COVID. All our markets now have movement control restrictions removed, and you're beginning to see a lot more participation in the real estate marketplace.
Hari, look, I got to ask you this, and I have to be direct and blunt here. I use your platform almost on a daily basis, right? I love it. I find it very useful. At the same time, though, in this kind of market, which is looking toppish, man, you got a lot of sharks out there in terms of agents and multiple listings all the time. And one thing that annoys me to no end, right, is the metrics in the listings, let's say PSF calculations. A lot of them are just not just too good to be true, they're just flat out wrong. It suggests agents are being not so much nefarious, but just simply sloppy, or hey, there's just too much business. Numbers like this are important to investors or potential property investors, all right, including obviously myself. Do you edit, do you police these listings, or do you leave it to the agents or the property owners or store owners or factory owners themselves to make sure that the spelling's right and the numbers are right?
No, absolutely. I completely agree with you. The data needs to be accurate. These are big decisions, big dollar decisions being made by people, emotional decisions when people are looking for their homes. So we do use machine learning to actually moderate and check things. We have over 3.3 million listings. So we have hundreds of listings being created all the time. And so the challenge for us is, how do we educate and train these agents? Many of them, to your point, are just moving very quickly. Some of them are new to digital interfaces, offline to online, continues in our region. And so we're using machine learning to actually train agents to improve the quality of their images, to improve the quality of their data, et cetera. And if we do see erroneous information, we try to come back based on this information. We go back, we run corrective training sessions, et cetera. But I think it is a journey we're on. Unlike many markets also, you're not legally required as a homeowner to work exclusively with one agent. So a lot of landowners will work with multiple agents. So that's a reality of our industry versus, let's say, the US or Australia or other markets. But I think having said that, we do have technology solutions which allow us to come back and educate agents. And empirically, our data would suggest that the situation has been improving significantly over the last 5 to 6 years, driven by these tech tools.
Okay, including AI. Understood. That's pretty sexy. Listen, Hari, got to go. Great to talk to you. Appreciate the time. You keep safe, and we'll do it again very soon, I hope. Hari Krishnan there, Group CEO of the Property Guru.